Here are the top three things you need to know as the clock hits 9 a.m. Futures in the red this morning on the final trading day of the month. The Dow, though, is on track for its best month since 1976. The S&P and NASDAQ also up in October, putting Wall Street on track to snap a losing streak.
COVID crisis in China. Shanghai Disney shuts its doors, barring people from entering or exiting the park to comply with COVID-19 prevention measures. Meanwhile, workers in Foxconn factories are fleeing and protesting the restrictions.
And a busy weekend for Musk and Twitter. Musk denies reports that layoffs will come to the company, but reassured users and advertisers that there will be content moderation. We're going to bring you the latest on the drama, but first, let's start on the markets and the week ahead here. Taking a look at the major averages here in the U.S., you're seeing the futures at least pointing higher as of right now. Well, futures pointing lower were up over the month, I should say, which is what you were seeing on the screen there a moment ago as well.
Yeah, the Dow is on track for its biggest monthly gain since 1976.
That wasn't even a thought.
Craziness. 14.4%, right, is the gain that we saw for the Dow in the month of October. You weren't even... I was born in 1976.
Oh, okay. All right. You're the best, Julie.
Bicentennial year.
You're my bestest friend.
Yeah, exactly. The S&P and the Dow's actually beat out the other averages on the month as well. You're that Kit Kat.
Okay, I don't know. Ted, what do you do to me, man? Like, he's the little mini Kit Kat just threw me for a total loop.
So the Dow up 14.4% in October, the S&P up about 8.8%, the NASDAQ up 5%. So it's really been a very strong month for the Dow in particular. And there's really been a disconnect between the Dow and the NASDAQ, which has been quite interesting as well. Now, the Dow, you could argue, is sort of a flawed index, right? It is price weighted, not market cap weighted like the others. There's also the argument that it's sort of an obsolete view of the U.S. economy. That said, it's also very closely watched by many investors. And the disconnect that you saw between the Dow and the NASDAQ, that doesn't happen very often. That gap between the two is the most that we've seen in a single month since February of 2002.
Yeah, well, I think this rally is just pretty much under the premise that we get that Federal Reserve pivot, and probably I think the market is positioned or hopefully thinking we'll get a sense of that maybe happening when the Fed meets later this week. But look, I think we've learned this month that stocks do not go down every single day. And at some point, even in a market that is concerned about higher interest rates, there are good bargains to be had.
Yeah, and on that thought, you had a late note from Goldman on Saturday, 11 p.m. note, so somebody was cranking away on that over the weekend trying to get that out, but ultimately said that they're looking for another 25 basis points hike to their forecast. So now, in full context, you're looking at 75, or at least Goldman is anticipating 75 in November, 50 in December, 25 in February, and another 25 in March, and they're looking at this to peak out around 4 3/4 to about 5% as well.
Yeah, and Nick Timiraos, who is seen as the new, Fed whisperer at the Wall Street Journal, was out with a story yesterday where he said the strength of the U.S. economy is really a conundrum for the Fed, right? And in particular, the so-called excess saving. That's the amount that people have above and beyond what they would have had in a normal economic cycle because of stimulus that is still on household balance sheets, particularly for the wealthiest Americans. And so, ironically, because people are doing relatively well, it's a problem for the Fed. It's going to mean it's more difficult for them to get inflation down. And his story implied that the Fed, like Goldman is saying, is going to be not pivoting for quite a while. So all of this rally that we have been seeing for the month of October, if indeed that's true, if indeed that is cemented by what we hear from the Fed on Wednesday when their decision is announced, maybe that rally's not going to last.
Well, Goldman also saying in that note, Brad, too, they expect rates to peak out at 5%. Yeah. And this market has really had a great October under the premise that we get a pivot and maybe rates don't hit 5%. So that's a big call out by Goldman, and also seeing that called out by some other banks, too, as well.
Yeah, they also mentioned that inflation likely to remain high, uncomfortably high, their words, for a while. That could make continuing to hike in small increments the path of least resistance, they're saying here. And where does that inflation become even more present? It's in some of the necessities that we've seen it continue to linger for an extended period of time. And if you look at some of the core industries that have seen some of the best performance, at least over that last month in October, too, XLE, energy sector, still up. That one was up by about 23% during the month of October here, barring whatever happens today. But all of that in aggregate continues to be one of the best performers in this market.
One more tiny thing, small
Put it in.
thing we have to mention, jobs report on Friday.
Yeah.
So everybody's going to be focused on the Fed, and then once they're done being spun around by the Fed, they can pay attention to jobs on Friday.